If you want to know 3 tech stocks that I think are a great buy and 3 tech stocks that I think we should be dumping as quickly as humanly possible, this is the right video for you. There are timestamps. You can jump around from the stocks if you want, but you'll actually miss the thread. So I'm not somebody who really loves to hand out fish because I sort of think it's charity. I don't think you need it. I think what you actually need is learning how I find these, and my hope is that this video will inspire you to do so, because Wall Street doesn't wake up in the morning and go, "Ooh, what should we buy today?" No, they actually have a rule book, 3 steps, which allow them to identify winning stocks quickly and get out of the losing ones even quicker. If you want to learn what those rules are, I put a separate video out for you at felixfriends.org/get-free with a hope that it'll help to get you free, get you out of your rat race and cubicle or 9 to 5 or whatever hell you happen to be in at present, which is what it's done for me. So head over to felixfriends.org/get-free. The link is down below in the description. And let's jump straight into our stock selection here. So I'm going to share with you on the screen here some basic research that I look at, as well as the actual chart, which is probably even more important, definitely even more important. And you can see what the first stock is. It is Spot. Yes, Spotify, the thing that keeps playing music you don't really want to listen to all day long. And it's an amazing business. How do I look at that? How do I know it's an amazing business literally in like a minute? Well, you can type into Google or anywhere really, the following numbers. Give me ROI, give me free cash flow, and if you want to add a little bit more to it, you could also ask it for gross margin. And I should probably use a slightly darker pen so you can see it a bit better. Let's do that. And I've got all 3 of them on here. So I've got ROIC, so return on investment here. This is ROI. I've got cash in purple, basically. You know, how much cash are they generating? And then in green, we've got the gross profit margin. Gross profit margin. Now, gross profit margin is a pretty good indicator of how tough is it to compete in that sector. If you have a high margin, it means very, very few people are offering the same service. The trend is always what I look at. So gross profit margin trending upwards, cash generation trending upwards, return on investment trending upwards. That's 1, 2, 3 little ticks. So we're very, very happy, right? So let's look at the stock price chart then and go, well, does that tell us what to do? Does that tell us where to buy? Well, yes, it does. A stock chart is all the wisdom and all the points of view of every big fund, small fund, hedge fund, retail investor in the world on a chart. It doesn't just track the price. It tracks what everyone's thinking of it at this particular moment. Now, the first thing, and I'm not a huge guy on funny looking chart patterns. You know, people come up with all sorts of things and go, oh, look, looks like a giraffe or like a cup and saucer or like a flying alien or all that sort of stuff. I don't really go for that. But there is one pattern that is one of my favorites that I look for, and it is an upside down head and shoulder. So this is the head. This is the shoulder. That's the shoulder. He looks a little bit like Nostradamus. He's a little bit, you know, not exactly straight, not doing his Pilates in the morning, but that's okay. And it is one of the most bullish setups that we find. So you might be wondering then, well, why hasn't it gone to the moon? Well, stocks zig and zag. So the little bit of a pullback here isn't really an issue, nor is that one. We're still looking pretty good. So what do we then look for in a setup like that? Well, let me delete my funky lines and draw a couple of more lines on here. One thing we then like to do is connect the armpits, right? And you got to kind of like, this is your left shoulder. So your armpit is here, right? That's the armpit. And what's the other armpit? Well, it was that one there, right? So you kind of draw a line above that. And the moment we break out above that, we actually have a buy. So we had a buy on Spotify for a little while. It's like, why didn't you tell them about this sooner? It's always late. There's always one in the comments who just seems to suffer from severe anger. Watch the movie Anger Management. That's very funny. Not going to help you, but it's very funny. So, you know, we had a little bit of a breakout here. We pulled back exactly to that line, going up. We went down a little bit here. Well, that was the whole like market wobble around Trump getting tough on tariffs, but only a little bit up and then bounced off that line again. It's almost as if other people are drawing the same line in the sand, right? They probably are. So what we're looking at here is 2 things you could, and I'm not telling you to buy any of these stocks, by the way. You gotta come to your own conclusion and risk management and research and so on there. I'm not buying it at this price. What I'm doing instead is I'm buying it at probably 660. You might be thinking, that's really, really random, Felix. Why would you pay more for the stock than what it's trading at right now? Well, I'll tell you why. Because it would take out this high, it would take out that high, and it would, except for the 1 day here, take out all the other highs. So if you wanted to be a little bit more conservative, you could go even higher than that, and you could go up to 670. I think those are basically the two buy points for this. Either at 660, or if you're a bit more conservatively, folded, then you do it at 670. If you're really, really aggressive, you could also buy it right now, but it just comes with a little bit more risk that we might bounce off these 660, 670 resistance lines again. So there you have it. There's a little bit more to that from a rationale point of view, which is why I'd encourage you to watch the 15-minute masterclass down below. But yeah, Spotify, one of my buys for the week. What is next on the list? It is Oppfi. Not one we hear about all that much. It's sort of a financy app type thing. And the data, you might be forgiven for going, but look, Felix, the cash flow is going down. You say that's a bad thing. Okay. We have to zoom in a little bit to see what that actually says. It says free cash flow is 112%, maybe a little bit lower right now. It's above 100%. So they're getting paid more, they generate more cash flow than they're receiving. How's that even possible? Some sort of insanely well-run business. The gross profit margin is 100%, 100%. And MasterCard tends to achieve that, but very few other people do. And then the return on investment is also moving up pretty impressively here. So this is just one of those like, what are you selling, crack or something? It's an amazing business. Hopefully it's legal. The SEC seems to have approved it, so it must be kosher, right? Now, Oppfi with a double P. OPFI is the ticker. This is what we're looking at here. So what are we looking at here? Well, a couple of things. We broke through with a nice little upward trend here, right? And then we really knocked that out of the park here on earnings. Really, really knocked that out of the park. And again, someone's going, it's late. I wanted to buy it here at 740. Well, good luck to you if you try to buy the bottom of the market, because I don't know that that's possible, because you didn't know it was the bottom of the market. At that point, it was a falling knife and it looked like a disaster. It was only once it got out of that consolidation phase here, it actually started to look reasonably attractive again. And then what happened? Like what pretty much happens every time. You go up, you go down a little bit, and then you zigzag sideways, right? So what are we doing here with it? Well, again, I'm not usually a fan of hitting the buy button just on the day, because I want to buy things that are actually going up. So what could you do? Well, you could draw a couple of lines. You could say, look, I want to buy it when it exceeded the previous close price here. That would be here, right? That would be one way. And that would be at about 12.18. Or you could be a little bit more conservative, and you could say, I want to buy it above the previous closes, which is about 12.50. Or if you're really, really like one of those, sticklers, stamp collectors, then you're up here at 12.64, which was the all-time high. Well, not the all-time high, but the near-term high. So those are basically our points. So we have essentially here 12.50. What was the other one? What was this one? 12.20. 12.20. And maybe you think, well, what's 30 cents between friends? Well, it's a 2 or 3%, still matters. But it's actually not about that. For me, it's never about buying the stock at the cheapest level. And maybe that sounds counterintuitive. It's about buying it when we have the momentum. So I want to see it break above these lines. And I want to see that significant volume happening at the same time. So I know that institutions are sniffing at it, and therefore the rally is likely sustained, not just a one-day job. So there is stock numero 2, Oppfi, and 3 is Crowd. And Crowdstrike. And let me pull up the chart for you here. You might be forgiven for thinking, well, this chart looks pretty boring, doesn't it? And yeah, it does, sort of thing. The numbers. Well, when you have a 75% gross profit margin and you're not selling crack cocaine, it's pretty hard to actually get higher than that. 80% is sort of mostly the sweet spot if you're making software. 75 is pretty extraordinary. Cash flow has dropped a little bit. I think they're investing quite heavily. There's a little thing called AI happening, which might be the cause of that. And then the return on invested capital, well, it's never really done much. So whether it's up or down 1%, I don't particularly care. It's just never really done very much. It's still fairly early for these guys. But when I look at the stock chart, I'm like, I'm liking this. So first of all, we've done the horrible stuff. We had the double bottom, and then we had another bottom which was much higher, and then this one was also much, much higher. So we have a nice little trend going on here. So why do I like it at this particular juncture in time? Because, my friends, we're exactly at the point of the last major high. Was that the whole time high? Probably did a crazy thing in the sort of COVID era, didn't it? No, well, at least in the last 4 years or something, it's the major high, which is really all we care about. So let me move back to my chart. So what do I want? What do I want? Well, I want all my stocks to go up. How does that happen? We just pick the good ones. How do you pick the good ones? You pick stuff like this here that breaks out above that. So if you close above that level, which is about $455 and a few cents, and you do that, and the volume picks up at the same time because the institutions are nibbling at it, what do you then do? Well, you know you've got yourself a certifiable breakout. That's exactly what we're looking at here. So we're like in Crowdstrike here at this particular moment. Now, none of these are stocks that I will hold forever. I pretty much hold nothing forever because, well, if you want to do that, I would recommend buying an ETF, some sort of index fund. For individual stocks, there is usually a time where they make money and then there's a time where they don't, right? So just zoom out a little bit here on Crowdstrike and say, say you had some sort of divine intervention and you bought down here somewhere, right? And the stock then went up gloriously 202%. So you're like, yay. Well, did you hold it forever until it was only up, you lost 150% of that gain to then gain it back? Well, you could do that. It's kind of painful. Or you could just exit and learn how to exit at about, well, maybe 140% up or 170% up or at least 146% up. And those are based on some rules that I teach you in the masterclass. And then you didn't have the drawdown, which meant that when you bought it again on the breakout, or maybe now, you've got that extra 150% money. You see what I'm saying here? If you let that slip away, you haven't got it. If you've got it, you can next time you make a trade or an investment, make a bigger investment, which means if that goes up 50%, you'll make a lot more money because 50% of a lot is a lot more than 50% of a little, right? You get the idea. So what's the next one here? Well, a couple of that we presently hate, and this is never a personal thing. We don't really develop emotional relationships with stocks. We try to restrain that to, family and furry beings. And Apple, well, there is a little bit of a problem with Apple. Yes, numbers broadly pretty decent, pretty good. The free cash flow is coming down a bit, but that doesn't even tell the whole story. For me, it's just like, well, what's the next big thing for Apple? They haven't really seemed to have got anything in the pipeline. The Apple car is dead. Those vision things are dead. The phones they keep putting out look exactly like the last phone with a slightly different camera and a slightly different shade of something. So they have a very loyal audience. At some point, there is a risk that someone comes along and just says, well, we've made the phone better. Like, Zuck is trying to put the phones into Ray-Ban glasses, right? That could be a lot better. I mean, you haven't got to carry it around all the time. I'm not seeing Apple do that, and I'm a little bit worried about that. Therefore, plus, they make 75% of their revenue, which is basically iPhones and, all the computer gear they do, is made where? It's made in China. As Trump says, and that's a tariff problem, right? So these guys have been asleep at the wheel, I think, and they need to do something about that. So what are we looking at? We look at the stock price. Well, it's kind of, first of all, it's hard not to own Apple because it's in every index fund in the world, pretty much. But this is bad. Why is this bad? Because someone's going to complain and say, I'm a stutterer. It's incredibly offensive that you would do that. No, I know. I'm sorry. I struggle with the whole PC thing. So what do we got here? Well, we had a couple of warning signs. Up here, we dropped below the 150. We did it again here. Whoops, I did it again the third time, right? And that wasn't good. So that was kind of your early warning sign. Obviously, the gap downs here, all of those are definitely warning signs. And then we're gapping down again. But really what I'm seeing is that, do you see the yellow line on the chart there? This one that I'm sort of crudely drawing over. That is the 50-day moving average line. And you can turn those on down here. This is inside TradeVision, which is the software that we built to give you the same quality data that Wall Street has access to. And we're bouncing against that, right? We're failing to break out of that, which is kind of what every trader certainly looks at. And we're not doing it. And then for the purple line here, which is a 150-day moving average line, well, we're leaving that really far in the rear view mirror. So we're also below that. That's also not good. So not pretty, not pretty. It's one of those things that just sort of screams, please don't own me, right? So yeah. If you own Apple, and this is not financial advice, what I would do is, as this pulls back up towards the 50, I would get out, sort of in slices and dices, but that's obviously entirely your decision. You have to come to your own conclusion. I don't tell you what to do. I just tell you what I would do. Now, here's another one. Lendingtree. Ticker symbol is tree, which is friendly enough, isn't it? But it is setting out to be a beautiful money destroyer. And if you just zoom out a little bit here, what are you seeing? It's a stock that's done nothing since 2024. And some people will therefore say, well, that means it's cheap. It's not brilliant. Let's buy it. It's cheap. If you learn one thing today, never ever buy something because it's cheap. It's never a good idea. If it's cheap, it's usually bad. So what are we looking at here? Well, we don't actually mind these sort of zigzaggedy patterns, but we mind being at the bottom of it. So really, for this to break out, we'd need to be up here at, $55 or something like that. And instead, we're down here at $35. So there is a massive sort of $20 gap between where it is a buy and where it is a sell. And right now, this is screaming sell. And we've closed below all the recent lows, all of them. All the recent closes at least, and that's a terrible thing. That makes people sad and poor. So this is one that looks absolutely horrific. Now, is there a reason for it? I don't really know much about the business. They do have a 96% gross profit margin, so probably another one of those, crack fentanyl dealers. But the cash generation isn't very good, and lending businesses have funny finances, which is why it's a little tricky to invest in them. But certainly there isn't any clear trend of any of this going up, and that might have something to do with it. The next one on my list is Wix. Remember those really irritating adverts? There was some pretty looking model, and she would say, I built my website with Wix. Come and code with me. What was her name? Carly or something like that, some sort of Germanic name. I'm sure she's lovely, and I'm sure she did something amazing with it. And it's a great product, I'm sure. I'm not saying that. I'm just saying that for some reason, the stock market doesn't like it. And it doesn't look that obvious at first, because actually cash flow is improving. The margin is decent, 67%, decent for a software company. I don't know what happened to return on invested capital. It sort of seemed to have given up in about 2021 and just said, we're not going to give you that data anymore. It's just too depressing. Maybe there's something there that we need to look at. But, you can make your life difficult and you can read balance sheets. I know some people enjoy that sort of thing. Or you can just look at the freaking stock chart, which will tell you what everybody else has thought, and somebody out there has done their research. The sort of combined wisdom of the market. And the first thing would be, well, if you're a trader, the 50-day moving average line up here was maybe your exit symbol. If you're more of a long-term kind of investor, then that might have been your exit, because that was the 150 where we broke through that. So that's the 150-day moving average line. This was up here, your 50-day moving average line, right? The yellow and the purple line. And you might be thinking, oh, but look, it broke through the 50. That's brilliant, right? That's amazing. That's positive. Yes, but there's a but, and it's not a pretty one. It's not the butt of that woman who was advertising it. It's which I have not seen, but I'm assuming by the face that there's probably a prettier butt than the one that we're looking at present. Now, apparently I'm misogynistic, if that's the word as well. It's a terrible video, isn't it? I'm going to offend everybody here. So that's not good. That's a bounce off. And then we get this here, which is a gap. Really, really hideous gap. And that gap came in on monstrously strong volume, as you can see in red down here, and that was on earnings. So apparently they did something or said something on the earnings which were less than pleasant. And then the next 2 days, we didn't bounce back up. It wasn't some oversold crazy. No, the market went, yeah, this really is just terrible. So we kept selling off on much, much stronger volume than usual, because the usual volume is sort of this, and we're doing about double that. So this is hideous. So there you have it. 3 stocks which are hideous. So if you got some value out of this, I imagine the value you'd get out if you could actually find these stocks yourself. You could look at any stock chart, literally any given stock chart, and you could tell in a couple of seconds, is this something that I might want to buy, or is this something I definitely don't want to touch, or is this something I want to run away from? You can get that certainty if you watch that masterclass at felixprehn.org/get-free, and I think it'll help you tremendously, because that's what people keep telling me. I thank you for watching. I hope to see you on the next one.
Global computer systems in healthcare, banking and airlines are slowly coming back online after a digital outage disrupted networks in many countries.